Most business owners don't fail because they can't get enough customers. They fail because their finances are a complete dumpster fire. As a matter of fact, US Bank did a study that said over 80% of businesses that failed because of cash flow issues. So if you're keeping your receipts inside of a shoebox still, or maybe you don't even have those receipts because you crumpled them up in a ball and throw them somewhere in your pickup truck, then you really want to make sure you watch this video so that you aren't that business owner whose finances are scarier than the most recent Halloween. In this video, I'm going to show you the 5 steps that you can take to make sure that you are getting started with getting your finances set up in the best way possible for you to be successful. I'm James Msadi, the owner of Our Team Accounting, and on this channel, I am passionate about helping business owners and entrepreneurs achieve their personal and professional goals through intentional financial planning. So let's go ahead and dive right into today's video. All right, so the very first thing that you want to make sure that you're doing when you are setting up your brand new business is making sure that you are from the start keeping your business and your personal financials separate. So we want to go ahead and open up some sort of business checking account. And the reason that we want to do this has everything to do with making sure that as a business owner, that one, you know what money is very specific for your business, and that's going to help you stay organized. But also number 2, one of the biggest issues that you're going to have as a business owner has actually nothing to do with your accounting. What it has to do is protecting your liability and making sure that, like, in the event that you get sued as a business owner, that you're not creating an opportunity for yourself as an individual to also be sued. And so it's very important, but by keeping your personal and your business finances separate, that you are creating in the eyes of the law, not the eyes of the IRS, that there is a clear and distinct separation between the business and you as an individual. Now, while there is that big component of kind of that liability, but it does actually make it easier when you start doing your actual accounting work. When you have it in 2 separate places, we don't have to go through all the transactions and be able to say, like, well, was this for the business or was this for the personal stuff? So it's going to make it a lot easier to, one, have financials so that your taxes are easier to do. But in the event that you end up getting audited by the IRS, it makes it so much easier to show them kind of clear and concise things. Because if it's all mixed together, you're gonna give them an opportunity and they're gonna take it to ask questions and nitpick every single thing, since they know and they can see that you're mixing all of those expenses together. Step number 2, now that you've got your separate business bank account set up, is to make sure that you've got your pricing figured out to set you up for success. I would say this is one of the areas that I see so many small business owners really struggle with because they don't fully understand all of the different components that need to go into properly pricing your services. So here are the 4 components that you should make sure that you are taking into consideration when you are pricing your services. The first is probably the one that's the easiest for most business owners to understand building into their pricing, and that's what's called your cost of goods sold, or COGS. And basically what that includes is all of the physical material that you need to deliver your service. This is usually the bulk of things that people think about when they're thinking about that. The category that most people often overlook when they are doing their pricing is their overhead expenses. So these are the things that aren't necessarily stuff that you're going to associate and tie to a very specific job, but are more of that just the cost of running your business. So this is going to be things like tools, software, vehicle, insurance, rent. And in particular, one of the big ones in overhead that people forget is the owner's actual salary and the salary of the roles that they are actually playing in business. Then the third thing in pricing is to make sure that you're actually pricing in your profit margin. Profit should not be just what's left over. You need to actually understand pricing in your profit, because especially if you're in the early days of your business, and by early days, I don't necessarily mean you've only been in business for a month or 2. What I mean is in terms of your size. If you're in that small startup phase, there's a pretty good chance that it's just you and maybe 1 or 2 other people. And so if you are not intentionally building your profit in, then as you grow, the hardest thing for most business owners to take into account is, how do I make that next hire, or how do I invest in the next piece of equipment, or in that next machinery, or that next truck, or any of that sort of stuff. The way that you do that is by being intentional about pricing your profit into your pricing at the appropriate margins so that you are accumulating cash in your business so that when it's time to execute on that, you have the money there to do so. The fourth piece that a lot of people tend to forget about when they're building their pricing structures is taxes. Nobody likes paying taxes except Uncle Sam. They like that you pay taxes. But as a business owner, if you're going to run a successful and profitable business, then unfortunately you are going to pay taxes. And as an accounting professional and you work with your tax people, you absolutely should be taking advantage of good tax strategies to minimize your tax obligations. All right, so step 3, now that you've got your pricing figured out, is that you actually need to be able to track your income and your expenses. Now, I strongly suggest that you eventually get to the point of having a system or a tool. QuickBooks Online is probably the most popular tool in the United States. But even if you're just super getting started out, like a basic Google spreadsheet can actually be super helpful to keep these things in line. And as a matter of fact, we've actually got a free template, an Excel template, that if you're in these like really early stages and you don't want to spend that money on the software, then you can go ahead and click the QR code on your screen right now, or I'll link it down in the description, to go and join our free school community where we will have this resource available to you along with other resources that we have put together. And then speaking of tracking numbers, we're getting into number 4. Now, number 4 is not necessarily something that's relevant for every business, but it is relevant for a lot of businesses. And this is the idea of job costing or project tracking. And effectively what this basically means is whether you are, on a construction site, whether you're doing a, rehab project on a flipped property that you've purchased, you need to actually track on every single job whether you're hitting that or not, because that's the only way that you're going to get that feedback of, was my pricing correct? You have to be able to make sure that you learn what those numbers are in your business and that they're in scope so that you're properly pricing things to hit the margins that you want to hit. Otherwise, you're going to be out there and you're going to be thinking that oh, hey, I priced this job great. We thought it was going to be 12. We've realized we need to go up to $15,000. We're going to make $2,000 on this deal. But if you're not doing job costing, you miss all that slippage and you're going to end up making you won't know. You're going to get to the point where you see your month-end financials if you're actually looking at them. And again, you should be looking at them at least every month. But if you don't know specifically what projects drove the financials to be where they were, then you're still left there scratching your head going man, what happened? You have to be doing that job costing, that project tracking. Again, think about whatever the product or service that you deliver is, you need to know what it is for every single one of those that you are selling. All right, so the 5th one is the idea of actually reviewing your numbers on a monthly basis. If you are only looking at your financial results at the end of the year because you have to do your taxes, you're missing out on so many opportunities to do things like optimize your actual cash flow, being able to understand your balance sheet, being able to understand your cash flow statement, and just these different levers is really something that can, help move the needle forward to make sure that, again, you are not only just running business right, but the financials are creating the results that you actually want to see in your business. Those are my 5 tips. And I've got one more bonus tip for you. And this is just coming from a personal, one of my first jobs, out of college was working in payroll wage garnishments. And one of the things that I got to see is the power of the IRS when you don't pay them and they just get to basically come in and start taking money out of your bank account or out of your paycheck and doing all kinds of crazy stuff. And so what I really strongly encourage you to do is not only set up one separate bank account for your your business compared to your personal stuff, but also get a second bank account set up where when you build out that pricing and your money is coming in the door, then you immediately are setting aside 15% of that for potential future tax payments, right? As you go through your first year business, as soon as you get in that second year business, you're going to need to be making quarterly tax payments. And again, you want to make sure you can make those. And the worst case scenario is you end up overpaying, you get some money back. And with proper tax strategy and planning, you can avoid that. But at the same point in time, it's really really critical, that you don't get in trouble with Uncle Sam, because that can take so much time to unwind and they're just not nice about it. So you at least don't have to worry about losing sleep because you didn't plan for enough taxes and you get slammed with a giant tax bill. So now that you know the steps to, kind of go through this process of making sure that you understand all of your financials, the one that, again, I think most people really get tripped up on is this idea of building out the proper pricing. So I want you to go ahead and click on the video that's on your screen. And over at that next video, we're going to dive deep into making sure you understand all of these components in detail on how to build pricing that's going to set you up for accomplishing all of your goals as a business owner. I'll look forward to seeing you there.